All right, good morning, everyone. TraderRob, we are live. John, good morning. Let's have here a banger of a morning. So let's take a look at the setups. We've got obviously always oil on our left-hand side of the chart, and we've got gold on the right-hand side of the chart, just so you're taking a look at it. Remember, my oil strategy, I trade that from 8 a.m. to 9 a.m. Central Time. So depending on where you're at, just make that adjustment. If you guys want in the chat, just let me know where you guys are at, just to do a location check. And then oil, we also, well, there's really two sessions. There's a session at 8 a.m. that goes to 9 a.m. That I'm currently not trading just because the statistics have not been obviously the best in session one. Session two runs from 9 a.m. until 10 a.m. So you will see me trading those once you see either a red or a green inside bar. And I just have an indicator put on through NinjaTrader. If you're looking for any of the indicators, there's a lot of them on my Discord, and also there is strategies that we use that automatically get you into these trades in oil, gold, and in the Rob reversal. And I will put, oh, John from Chicago too, my neighbor. All right, let me put in the website address here in the chat. This is a great, it's a site that I created that has got the most updated NinjaTrader strategies and the bots that will automatically take these trades. So if you guys go there, again, that's the most updated section we have. And then on our Discord, which is free for members, it's free for everyone. I'm sorry, not for members, but it's free for the community. There is a section in Discord that also says indicators, and there you're going to find a lot of the tools that we use, that help you with take profits, stop loss, factoring in these inside bar indicators. There's TradingView scripts for those of you that are just using TradingView chart to trade. Remember that on TradingView there is nothing that's automated. It's pretty much just indicators to show you getting in and out of trades or setups. So the website that I linked in the chat is something that you guys should visit. And there's videos on every single one of my strategies here. So the most updated gold, oil, and the Rob reversal. I did upload a video last night. It's scheduled to be released this morning at 9:30 a.m. Central Time, which kind of goes a little bit more in depth on how I come up with my levels. If you guys have been following me on my channel, I've documented very publicly that I have struggled very, very much with trading the ES and the NQ with, I call it level trading, where you think price action is going to a certain area and you're looking for a rejection or a bounce where you can get a scalp out. I know a lot of people love to use indicators, VWAP, Bollinger Bands. There's tons of them, and those work for some traders. It just, for me personally, it never has. So I am going to be pulling up a chart. I'm just going to leave this one. I'm going to leave oil and gold up for a little bit, just because more likely than not, based on how big this source bar is, we might have a trade here pretty early in the morning. It looks like in oil session one, you probably are going to get a trade. This is obviously a pretty big source candle. Let me take a look and see how big this guy is. Yeah, so it's almost 40 ticks. So it's a pretty big size trade. And as I speak, It might not turn into an inside bar here already this morning. But we're going to keep this one open just for this first 5-minute bar, and then I'm going to open up my charts and show you guys exactly how it is that I come up with my levels each and every morning. If you guys watched my previous live stream, I started an evaluation with Top Step, a $50,000, actually with Top Step X, and that they just announced that that's going public. Before, you kind of had to get in through that Top Step TV. They were running some fire codes, and now I know it's public. They're running I think 80% discount, so you can get your Top Step X account for like $19 right now. And I think there is a link down in the video description. I am an affiliate of Top Step, full disclosure, so I do make a few bucks there. So I will pull up those charts. I will map out the ES, the YM, and the NQ, just so you guys can kind of get an understanding of what I'm kind of looking for. And then the nice thing is, by the time that this stream ends, the video will be posted on my channel that kind of goes over in detail exactly what it is that I am looking at, what type of trade setups that I'm looking at. And the one thing that kind of hurts me as a full-time, obviously most people know I'm a full-time real estate broker. I own a RE/MAX office here in the city. So the hard part for me is with levels trading is that you got to have a lot of patience. And the patience comes in because if you find that setup that you've got, that's the most high probability setup, at least in your mind, based on whatever strategy or whatever confluence you are using, you really need to have patience to let price action get to your level. And yes, many times I miss a trade by a point or a few ticks, and it's very frustrating. Sometimes price action doesn't even go in my direction, doesn't even go anywhere near what I had kind of mapped out. But that is how you start to become a more disciplined trader, at least on that side. With my morning strategies, it's mechanical. It's rule-based trading. We have set times. We know exactly what our take profit and our stop loss is. And we know what's going to get us in or out of a trade based on these inside bar strategies. Same thing with the Rob reversal. I made a few tweaks with my Rob reversal. I'm going to go over those settings. I'm going to open up that chart and show you guys the current settings that I am using on that strategy. The nice thing with the Rob reversal is that I don't necessarily need to be in front of the charts for that to run. I know the exact pattern that I'm looking for, and I know what times I want to trade that. And the nice thing is that since one of our members, Matt, he coded the strategy, it allows me to leave to work and still be able to trade the Rob reversal when that setup appears. So we've got about 30 seconds left here in gold, and this might be our first. Let me just take a look and see. All right, so we've been on, well, we were starting on a downtrend, kind of been like a V bottom here, and now just ranging here for the last, I don't know, maybe 2 hours. So I get in to these trades using an indicator that I bought through Trade Devils. Once I click on sell down, buy up, automatically straddles that inside bar and pretty much gets my orders, my OCO orders. So right there, we are in our first trade of the day, and our first trade is to the short. We're looking for 18 ticks or $180 in profit. Let's see here. Let's adjust this guy. All right, so now we are completely set up. Let me open this up so we can see it a little bit better. A nice little flush here in gold. Also, oil session 1, which is on the top side of the screen, has also activated into the long. I am currently not trading it, so I don't really need to worry about that right now, but I like to track the stats. And then in gold. So the only management of the trade, and currently I'm doing this manually. I am testing an indicator that I think is going to be really sweet for this type of trading. Is once we hit 70% profit, I will reduce my risk in half. So I'll go from $180 of risk down to $90 of risk. But like I said, it needs to hit about 70% take profit. And the reason for that is that you also need to give these trades some space, to some room to move and to breathe. If you suffocate these trades, you go straight to break even. Many times you will get stopped out just for price action to go in your direction. So that's really the only management piece of this type of trading that I currently manage manually. So we did have an initial push down. That's what these inside bars, that's what the strategy that, I've really seen that it's a great area to determine indecision in the marketplace, kind of like some built up pressure. And then once that pressure gets released, typically you get a pretty nice move down. Now, yes, we can easily say there's an area here where, you might get some resistance. Oh, so right there we came about a tick away. Gosh, I hope this is not going to be one of those days of a tick. So let's reduce this down to $90. So again, here, unfortunately, price action came about a tick away from my full take profit, and then we got a pretty strong rejection. I like to see these trades through. I know many times before, going back 2-3 years when I was trading, many times I would punch out. I would punch out right here. I would get nervous that it's going to reverse back out on me and I'm just going to lose everything. And I have just found that if you stick to a strategy that you have confidence in and you stick to your original idea, I would say more times than not, it should work out for you. Now, obviously, we can't control the markets. We can't control the commodities markets. We're just, again, looking for that very particular momentum shift. And obviously here we're hoping that sellers kind of step in and bring down price action here just a little bit so we can take our first win of the day. So Lee, do I do better with oil strat or the NQ? Well, if you've been following my channel, I don't know, maybe you haven't, but I post the statistics on all of the setups that I have every single month, and I would say the Rob reversal has probably been the most profitable, even though last month had a really terrible month with the Rob reversal. I think we ended up losing about three total trades. Not three trades in total, but it was a net loss of about 3 trades on the NQ if you were trading the original 35-point stop loss and take profit. So that was that. Now, oil session 2 has been probably the second most profitable session or strategy that I have traded. There's a nice little flush. Let's go. Give me a take profit here. Pete, yeah, so here's my feeling with that. So Pete said, I was going to tell you to move your take profit up one, and I get it. I totally get what you're saying on that. The issue that I have with that is that if I'm constantly changing my take profit and stop loss, the way I feel as a trader is that where does it kind of end at that point? When you start bringing discretion into mechanical rule-based trading, then it doesn't really start to become mechanical at that point. And yes, I mean, this thing could reverse on me and I could take my loss here, which we did not. We took a full take profit here. So beautiful trade here in gold this morning. So now that I got some time, we actually got a really good, now I got a really nice little buffer. Now I can kind of go into I can go into, let me just map really quick the oil session 1. So I've got that one as well. That one doesn't look so promising right now. So that is 38 ticks, 38 ticks. That's going to be a difficult one, I think, this morning. Okay, so I got oil session 1. Now this is a pretty big source bar. I think it's in total, I don't know, I think it was like 40 ticks, but remember, your take profit goes right up here. I'm sorry, your entry to go long is at the top of this green inside bar. And when you put your stop loss at the bottom of this source bar, it's 38 ticks. So in this scenario, what I'd like to do is I still go 1-to-1. So 38 ticks of take profit, 38 ticks of stop loss. I will only make the reduction down to 35 ticks if it's 40 ticks and higher. It doesn't matter if the source bar is 40 ticks or higher. What matters is based on where your entry is to the bottom of the source bar, if that is 40 ticks or higher. So I've had that question before, so maybe that helps. And again, the full details of oil and in gold are in my description below. They're also on the website that I posted here. So let's take a look at our levels here for this morning. Let's start with the ES. It's my favorite instrument to trade. And for those that just hopped on to the stream, I did upload a video that is going to be posted here this morning in about an hour and 20 minutes at 9:30. That goes more in depth. It's about a 25-minute video on how I come up with my levels each and every morning and what exactly it is that I am looking for. So we'll go over it here, and then from here you guys can, obviously take a look at the video and see if there's anything there that that you might not help. Can you go over the gold trade again? Yes, I will. Right after I finish my levels. So I like to start on the 15-minute time frame. Okay, that's extremely important. I have messed around with higher time frames like the 1 hour and the 4 hour. I just find that I don't want my chart also cluttered with tons of levels, because at that point then you start to become not very confident in which level it is exactly that you want to trade. So I have found for scalping from 4 to 8 to 10 points, running off of the 15-minute and then switching down to the 5-minute has actually worked out extremely well for me, trading this style of trading. Now, what I'm looking for is I am looking for areas in the market where you get a directional, you get price action going in one direction. It could be long or short. And then you suddenly get like a halt. You get a halt of price action, and then you get a strong rejection down. Okay, obviously some people call it support and resistance. There's probably a ton of different terminologies for it, but this is the particular side that over 7 or 8 months that I have been just studying charts. After I finish, at nighttime, I love to look at charts. I'm kind of a nerd that way. But what I will see is I will see an area like this right here, where price action is going obviously in an up direction. It gets halted and then starts to make a move down. The only other criteria that I am looking for is for that area to not have been touched again. So if I will draw my line right here, and what I'm looking at is I'm trying to intersect. My line goes where the two bodies, where the line can go through both of these bodies. Okay, I know some people love to draw zones or boxes. The issue that I personally have with boxes or zones is that in the ES, if you draw yourself a zone, and let's say that zone might be 2 or 3 points away. Well, one, now you've got that 2 or 3 point buffer that you're looking to take a trade in. And then your stop loss is going to have to go beyond that zone. And by the time you finish looking at it, you're looking at maybe 5 points of 5 or 6 points of stop, and it's just putting you past that zone. Whereas if I just draw a line, and if price action can come back and touch that line, at least in my opinion, I feel like I am getting the best price available. And then I know that my stop, depending on what my take profit is, what I'm looking to make from it, then I know that I have a very clear stop loss that I am looking for. And we'll go over how I kind of factor in my stop loss and my take profit. Now, this first zone that this first level that I mapped here is at 52.16. 52.16, if you guys look at this white bar right here, let me see if I can, let me just grab one of these arrows so it makes it a little easier. Okay. So if you guys look at this white up bar right here at 3:15 in the morning, you can see that this really came very close of tapping into my zone already, okay? This to me would be a little bit weaker of a zone. What I'm really looking for is a very kind of not violent, but very strong movement out, okay? Another great example would be right here, where you've got price action that is clearly going down. You get this up bar, and then you get a strong movement down. Well, in my opinion, from what I have found, is that if I put my line right here, okay, where it intersects both of these bodies, if price action comes right back up to here, it will generally do two things. One, it will have a strong rejection. Okay, it's picking up liquidity, the orders that were not left there. Honestly, I don't know why it does what it does, but I do know that based on all the price action that I have been looking at, that there is a very strong chance that it's going to do two things. One, either give you a strong rejection down, which will give you a nice scalping opportunity, or number two, it's going to fiddle around in this area for 3 or 4 bars. And that's telling me that there's something there. There's something there in the market that is causing a big indecision with buyers and sellers. Okay, so Alex, thank you so much for the super chat. Really appreciate that. Thank you so much. And again, that's something that I have found that I have a relatively good feeling that something might happen here. Now, for instance, if we didn't have this one, here's a strong movement down, we get an up bar, but we don't get that thrust upwards. We don't get anything there that is something that I would map on my chart, okay? And as you can see, price action is coming right back in to tap into this area right here. So let's continue looking at our chart and see if we can find some other examples. Here is an absolutely perfect A+ setup in my opinion, which is a level on the S&P right here at 52.2475. This guy right here, in my opinion, would be an absolute A+ setup because one, you have a clear uptrend, you get something that stops the market, and then you get a strong reversal out of that market. And this to me, if price action came right back up to here, you've got yourself a great trade that would look something like this, where price action can go to right here, and then my take profit would be this next level. So that's why mapping these levels not only identify areas where I think something is going to happen with the market, but it also starts to provide me with areas that I know that, or I should say, price action has a high probability of coming back into and tapping into that area. So that, and then you're going to say, well, Rob, what's your stop loss here? Well, we'll get into that because that's what I start using the 5-minute levels to also help me with my stop loss and take profit. So now I've got three levels above where price action's at, which is great. Now let's see if I can find a few levels below where price action is at. So obviously now we're going to have to start going back into the past and see what happened. Does anybody see here a few areas that kind of illustrate what it is that I'm talking about? Well, price action's right here. You guys remembered it stalled out right here, right? You see how you had this long wick and you had something that met the market with resistance? Well, it's right here. The resistance is right here. This level right there. If you intersect this down bar, so you've got a clear uptrend. You had something that stopped that that trend, and then you had strong movement out. I mean, this is a very strong bar out. Well, if I map this level right here, I can tell you that price action has had a very hard time getting through there. So that's where these levels start to show what it is that they're looking at. Now, I will tell you something else. Is this an A+ setup in my book? Absolutely not. Because yes, we had the down bar, we had something that stopped the market, and we had something that made the market go in the opposite direction. But do you guys see how this left this price action right here? You see this wick down here? Well, to me, that it is tapped into that level right before, like once again, right before you had that boom. Okay, so this to me would be an area where I could see stalling of the market, but not necessarily a clear rejection upwards. Okay, hopefully you guys understand that. Now, do I see an A+ setup somewhere else? Absolutely, right here. This would be an area that I could definitely trade. So again, you've got an uptrend, you've got a down bar, so an opposite candle, stalled out, and then price action immediately came out of that area. Now this maybe not an A+, just because again this wick down here, we're looking for things that are very clean. But this would be a level that I would still mark off, because this level and this level now are close enough where you have a trading opportunity. This is about 5.5 to 6 points. And this is something that, the S&P loves to range. It loves to just do this all day. I should say on most days. But so it's just this constantly all day long. Now, obviously, if you get a strong news day, or you get some report that comes out, yeah, at that point you can you can get destroyed very easily trading this style of trading. But there is still opportunities. There's always going to be retracements in the market, and there's always going to be breathing space in markets that it needs. I mean, you can't just sell or buy in one direction. Eventually, you need the other parties to come in, and it's rhythmic. It's the way that the markets, in my opinion, work. One last level here that I would probably map out would be right here. Just because, but this was kind of rangy here. So again, not a very strong level in my opinion. Don't really love that one. Of course, my neighbor's cutting his grass right now, so sorry for the noise if you guys hear it. All right, so I came up with my levels on the 15-minute. Let's go to where price action is currently sitting at. And now what I'll do is I'll drop back down into the 5-minute. And on the 5-minute, I'm looking for the exact same thing if I can find it, okay? And I sure found something. You got a clear downtrend, okay? And then you've got a strong movement in the opposite direction, and then it obviously started to range here. So what I will do is I will map this here, but the only difference is I will make it a dotted line. The dotted line for me represents a 5-minute time frame. Okay, a little bit of a weaker level. Why do I like using these 5-minute time frames? Well, one, it helps me identify some small scalps, but more importantly, it helps me identify good stop loss or take profit opportunities. Meaning, if my initial thought was that it was going to get to this line and maybe come right back to this line, which would be a very decent trade, where can I put my stop loss? Would I just guess? Would I just look for risk to reward? I know some people say just go 2 to 1 or 1.5 to 1, 1 to 3, whatever it is. Well, I have now what I like to call this another level of defense, meaning that if I have a trade strategy that thinks it's going to bounce off of this strong 15-minute time frame, I will use this 5-minute as a stop loss. And it will look something like this. My trade would start here. I would be targeting right here, which is 13.25 points, pretty nice size trade. And then I usually will go somewhere in the middle of these two levels. I will try to find levels that help me identify where this might have another layer, even though weaker, but another layer that price action might want to leave from. And that's how I determine my stop loss and my take profit on my charts. So, and it's been working really well for me. What I would like to do then after that is identify another 5-minute level. Right here where price action is at, the reason why I would be targeting 5206 is because I don't have any other 5-minute time level right here. You can see that price action just went in one direction. There was nothing that stopped price action here and made it go in a different direction. Okay. Now I would have to kind of go back to right here where there was at least a small, I mean, it's terrible, but there was at least a small interruption of a downtrend where it fought. Okay. It fought. And it still ended up losing. So in a situation like that, now you've got maybe a trade opportunity from this level down to this level, using this as your stop loss somewhere right here, which is still a very good risk to reward. And then some mornings I will look at the chart and some mornings I will look at the chart and there will be a scenario where I don't see any good levels. I might see a few 15-minute levels and I won't see any 5-minute levels. I like to track this about an hour before the market opens. In that scenario, what I will do is I will wait for the open. I will wait for in my time zone, it's at 8:30 in the morning. Central Time, 9:30 Eastern Time. And I will then just start to look at price action and see what new fresh zones or levels are created by price action for me then to start marking up and hopefully find some trading opportunities. So right now on the ES, this would be the only trading opportunity that I would probably take a look at is, again, as a movement right to here with a clear rejection down to here, and then I will use this as a stop loss. Now my take profit will only change if something in price action here creates that exact little scenario that I have been mapping out for you guys, where price action has a complete change of market, change of shift, and then I can then reduce my take profit to that area, which has got a little more likelihood of it going into. So hopefully that starts making sense. We do have oil inventory here this morning at 9:30 in the morning. So we'll see here in session 2 of oil if we end up getting a trade before, during, or after oil inventory. Aaron, what's better, gold or oil? I would say oil session 2's got better statistics. I just love trading. I love trading gold. I would say it's been consistent for me, but definitely higher win rate is oil session 2. Report coming up, Rob. Yep, we got oil inventory coming out in about an hour. If anybody has any questions on the levels, now's a great time to ask me. I'm going to open up the NQ, and then we will take a look at the NQ. So another thing too is I love to start with clean charts. Every morning, just start with clean charts, map them out, and try to find some clear trading opportunities. All right, so let's move into the 15-minute time frame. That's where I like to start all of my okay. So we've got, I can see 3 levels already just looking at this map, looking at this chart. First one's right here. I like to make it a solid line. Obviously price action came down, and even though this candle is going right now, clearly something in the market caused this to have a significant shift in price action. Right here, we've got another level. Clear downtrend. Something tried stopping the market here, and the sellers won. And then you got a clear movement out. This is a great one. Intersects both bodies. And the last one would be right here. Uptrend, strong, and then a continued strong downtrend. So I just try to find those areas. I put a level that intersects both of these bodies. That's what I'm looking on the 15-minute, and then let me see if I can find at least one level below. Okay, I don't like this level right here because this wick already tapped into it right here. Don't like this level right here because this wick also tapped into it. So I would have to go all the way down to right here. This is an A+ setup. Something caused the market to move drastically in one direction from a particular level right there. So now I've kind of figured out on the 15-minute, I know what price action levels I'm looking at on the 15. Now I'll go down to the 5-minute, and then let's take a look and see. So very similar to the ES, there was nothing here in between this range that would cause me to map out a 5-minute level. Now, maybe not as great, but one that I would map on a 5-minute would be right here, where you had up bar, down bar, up, up, and then a clear down bar that made price action move pretty strongly, or definitely more strongly than the previous price action. So then I will put this line right here, and I'll change this to a dotted line, and that's a 5-minute level. Okay. Granted, not the best because you got a big gap right here between 18,161 and 191. That's about 30 points of range here. Too big of a range for me to I would say, find something that's tradable. Let's see if there's anything else. Nothing here that I like. So nothing here that I like above. And then let me just see if there's anything below this current level. Okay, here's a great example. Right here. Clear downtrend. Clear downtrend. Clear change in direction. Right here. Okay. This to me would be a sweet area. Just because, and this is probably exactly where price action was just at. I mean, it's incredible how this just keeps repeating itself. But this is a setup that I would love. I've got a 15-minute level, and then I got a 5-minute level, 4 points away from each other. So now you've got a clear area where price action would want to tap into, move out of, and you've got a stop loss area here. You put your stop loss somewhere here, which makes your risk to reward worth it. And I'll be honest with you, Here's another good level. Nope, that got tapped into. So I wouldn't use this area because this wick right here tapped into it. That's it. That's all I got over here. But this line, that's why you have such a strong rejection from here. I mean, you can see it. You can see where you map it to where it goes. You've got a pretty decent trading opportunity. Let me just see what this, I mean, this is huge. 76 points. Even if you go to 1 to 2, this would be down to here. I mean, you can probably even, you know, you can fiddle around with your take profit and stop loss, but I'm telling you, the things just keep repeating itself. Have I tested the levels in oil? I have. I have tested it in oil and in gold. For some reason, it does not work. I honestly, I can't really figure it out, but it'll work sometimes where it gives me some hope, and then many times it fails. So, and to be honest with you, the NQ and the YM, I would say out of the 3 instruments that I trade, the ES is my favorite to trade the levels on. It respects these levels much better. Second would be the YM, and third would be the NQ. Okay. And then some days, what you really are looking for is A+ setups, which this would have been an A+ setup in my book. Oh crap, market already opened. It's 8:42. So I don't even know if I missed a trade over here or not, but we'll see. Now, would I take this trade? With a rejection here, this might make an area here that would help me maybe come up with a take profit. So if this candle closes as a down bar and we get a continued move down, well, then that opens up a new level right here where I might target that level. But let's just say all the way down to this level again. No, I wouldn't take this trade because the gap from here to here, which would be my next layer of defense for my stop loss, is almost 30 points. So I would have to be targeting probably somewhere in the area of 80 points for that trade to be really worth it. Because yeah, 30 points is to right here, but you need a little bit more. You need a little bit more space. So I would much rather have this scenario than having this big scenario right here. All right, let's take a look at the YM. All right, YM's got a 15, oh, I'm at the 5 minute. Let's go to the 15 minute. Ooh, it's ugly. It's ugly. You could kind of make a case for a level right here, but you see how this price action came down, kind of tapped into it. I like to see clear movement out in one direction without the wicks coming back into the level. Didn't necessarily touch it, but this would be very weak. Don't like it. Same thing right here. You got an uptrend, something caused the market to reverse into a different direction, but you can see this down bar right here tapped into this level already. So again, I think it's a weak level. What happened here? Same thing. That's what I'm looking for. Uptrend, straight down trends. This is an area, but look how this wicked into this area. Again, it weakens this level, you know, because price action has tapped into it for one reason or the other. And over here, you got the same scenario. Personally, I don't like the YM chart today. There's no clear opportunities whatsoever. If I go into the 5 minute time frame, you've got a level here, but again, it's almost been tapped into. Dotted line, this here, possibly. I mean, you could maybe make a case for a trade, something that would look like this, probably right back to this area here. But I wouldn't do it. I mean, I wouldn't trade it. That's just not something that I'm looking at. Let me just open up the ES to see if there is an actual trading opportunity that we can all take together. And then what I like to do is after the market opens, I like to map out any fresh levels, which there has been none. So again, the only trade that I would look at, and it's not a good one, this is not an A plus setup, I would probably consider this a B minus, would be a trade here to right here. Okay, let's say that this continues on an uptrend, it closes on an up candle. You would have a fresh level right here, 5-minute level. So you can say you can take a trade, a short from here down to here. You've got a stop level marked here. The only reason why I don't like this one is that it wasn't a clear movement out. Yes, it had a great rejection down, but it took 2 candles to do it. So my feeling is, looking at the chart, that this candle has kind of come back and tapped into that area, and that's what caused that strong movement. But again, it's a B minus setup, not the best thing in the world, but maybe a possible scalp. This would be, let's just see what this trade would look like. So this would be my entry to go short. We would be targeting 7.25 points. If we left our stop loss right there, we would be risking, let's just say 5. So almost a 1 to 1.5 risk to reward. Not terrible, but not the greatest. Not the greatest in my opinion. Which means it's probably going to work, but we'll see. All right, let's see what other questions I got. What indicator is that green and red box? Let's see. The green and red box. So, I think what you're talking about is my, if I look at my, let's get these charts in order here. So we got oil starting up in about 12 minutes, session 2. If you're talking about these green and red, these are just inside bar indicators. These are by TradeSaber. So if you go to TradeSaber, if you Google him or you go on YouTube, he's got a Discord in there that he's honestly fantastic. There's a few traders that I like to give props to that really have the best interest of traders in mind, and they're not just profiteers or people bullshitting like majority of them are. So TradeSaber's fantastic. What I think you're talking about is this guy. It's called Order Line Decorator. Okay, that is that's the indicator that I use that will give you the red label with the ticks and the currency. If you can go straight on our website, you can go straight on my Discord, go into the indicators section, and you will find that indicator for Ninja that you can just download and install it. And the reason why I chose that, or the reason why I like that one, is that Ninja, I think, is a great platform. There is a lot of benefits with Ninja, but their chart trading feature is, let me see if I move this into Sim. Let's see here. What was I trying to do? Chart trader. That was stupid. I shouldn't have done that. No. Okay. So with the chart trader, if you put your order in, it doesn't tell you. It does not tell you what the actual profit would be if you move that order up or down. It tracks your profit. It tracks your profit while you're in the trade. It'll tell you what your P&L is, but it won't tell you what your profit and loss is. So it's different than a lot of the other trading platforms. And that line order decorator fixes that. It fixes that scenario where if I move my stop loss and take profit, I know exactly what I'm going to be getting out of that trade every time that I move it up or down. So I think it's a fantastic indicator. One of our members on our Discord found it, and it's free, so it's there to download. It's fantastic. What's your lot size on the various instruments? Great question, John. So it all depends on what you're doing. So if I trade my oil and my gold strategies on a 50K eval account through Top Step, and I trade it in through a cash account. I'm currently trading oil session 2 and in gold with the 1E mini contract, and that seems to be okay. Now, obviously, trading 1E mini, if you have 4 or 5 days in a row that go against you, more than likely you might be down a decent amount of money. Vice versa, if you go back to, let's say, March and you're trading oil session 2, you would pass in an eval, pretty quickly, trading an E-mini. So I have kind of messed around with my lot sizes trading the eval, which is I've gone from 3 micros in oil, 5 micros in gold, and that seemed to have been a pretty decent strategy. I mean, I've pretty much had this eval for, I don't know, it was like almost 2.5 months. Came down to like negative like $80, reset it, and then I started trading just the E-minis off of it. And I think I'm up on this eval right now, probably $500. So we'll see. In cash, which is what I honestly care the most about, and that's where I make my paychecks from. That's what I consider it. I trade the 1E mini. So I trade my gold and in oil in 1E mini. But it also depends on what type of account size you have. So I generally, in my cash account, I fluctuate between $6,000 and $8,000 is typically where my balance is always sitting on my cash account. So based on that, I'm willing to take a trade in oil and in gold with an E-mini, and I feel comfortable with it. On the NQ, or the Rob reversal, which let's pull up that chart. See if there's any setup here today. There's no setup yet. So in the Rob reversal, I will trade that. The 2 evals that I have passed and funded have always been with 1E mini. What I have currently done, for those of you that trade the Rob reversal, what I have done is, obviously April, as I stated, did not have good stats at all. So we were negative about 3 trades on the Rob reversal, trading it on the eval account. What I did on my cash account was I reduced my lot size down to 2 micros, only 2 micros of the MNQ. And what I did was, because I started to see a very strong pattern in February, March, and April, where when the Rob reversal would hit, and it would hit for profit, that thing just keeps going. It just keeps going. And what I did was I made a small tweak to my strategy where instead of looking for a 1-to-1 risk to reward, 35-point stop loss, 35-point take profit, what I did was I instead increased my take profit to 70 points, left my stop loss at 35 points, and then I enabled a trailing stop feature on the strategy that Matt created. So that strategy, those settings look something like this. Let me disable this so we can see it here. All right. So on the strategy, first thing you're looking at is your start time and your end time. Okay, I trade the Rob reversal from 8:30 in the morning until 1:15 in the afternoon. Obviously, you make your adjustment for your time zone. Okay, so if you're in Eastern, it would be 9:30 to 2:15. Um, the next thing that you want to adjust, obviously, is the number of contracts. What do you want to, if you're going to trade the NQ and you want to do one, you got a 50K account, move that to one. If you've got a $100,000 eval, you could probably move that to two, maybe keep it at one. Rob EMA period 8, that's what I trade the Rob reversal. The EMA color, these are all default settings. You don't have to mess around with anything here. Here's where the change happens. So before, my chart or my settings showed up as used fixed stop, meaning that when the orders get thrown out on the strategy, there's automatically going to be an order to go for take profit at 70 points, and there's going to be a profit a stop loss of 35 points, and those don't move at all. They're just fixed. The change that I made is now I will move it to use trailing stop. And what that now accomplishes is that as price action moves in my direction, it will trail the next following candle at the bottom of that wick if it's going long. It'll trail it down and put it at the top of the wick if you are going in a short. And there's a few things here that I like about it. One, if price action reverses on you and you might be 15, 20 minutes into the trade, might reduce your stop loss here a little bit. I've had many scenarios where the 35-point stop loss, it doesn't hit it by a point or two, reverses and goes to full take profit. But for risk reduction, it helps. The trailing stop helps. And then what it really helps on is on those big moves, where if you can get to 45, 50, 60 points, 70 points, and it's trailing it, it just helps you secure some profits and still gives you that opportunity to achieve exactly what you want, which in my case is 70 points. So that's how I've been trading it. The nice thing is on my cash account, I'm only trading 2 micros. So my max risk on that trade is $140 and I'm looking to make 280. Obviously, if you're a trader, you know, risk to reward. You know, on some of these trades that if you can get double, you know, it just gives you a little bit of a buffer. So that's what I have found. And let me enable this guy. So, oh, and then I'll just finish this off. My profit target long in ticks is 280, which is 70 points. My fixed stop loss is 140. So, and it's the same for shorts as it is for longs. Let's go to enabled. All right, here we go. So the strategy back is enabled. And again, this is trading for me. I am not doing anything here manually. This is fully automated. Takes the trade, puts the orders in, does the trailing feature. It is all completely automated. And again, if you want the strategy that Matt created, he's freaking awesome. I know he's on the chat somewhere. And he's always in Discord. Him, Alex, Eric, there's been a bunch of people that have really helped me out on Discord. And they're giving back the same way I feel like I have as well. If you go to that website, I'll just put it in here one more time for people that have just joined. Rob's Trades. That's the website right there. You could download the indicator. And there is also an indicator, okay, 9 a.m. So now we can kind of start to take a look at oil for session 2. Hopefully we can get a nice little trade here. The only thing that stunk about doing the live is that I wasn't able to take gold in my cash account, which would have been a $180 profit. And the reason for that is that this damn streaming software takes up all of my real estate on my screen on where I trade normally. So that kind of stunk. So that kind of cost me some money there to this morning, but that's okay. It never fails that it's always the winner that I lose. Maybe not. All right. And then let me just talk really quickly about the oil and gold strategy. So as you can see, I trade this manually. I trade this manually every single morning. And there is a strategy, so a bot that will automatically take these inside bar trades for gold and oil for you, also created by Matt. Those are available on the website as well, with videos on explaining the strategy. Now, I know there's been some confusion on the site where I have an area to download the oil strategy, and I have an area to download the gold strategy. Well, those two strategies are the exact same because they're basically the exact same strategy. It's just two different time periods that I trade those. So like gold is only from 8 to 9 a.m. And then in oil, there is 2 sessions. So there's 8 to 9 and then 9 to 10. So there is a difference there. So when you download that strategy and import it into Ninja, for oil, you just leave it at the default settings. Just adjust your time frame, your time zone for your time zone. That's already a default setting for oil. No issue. Now, when you open up your gold chart, you're going to have to, because it's going to be as a default of oil, at the bottom of your strategy, there's going to be a little box there that says template. If you click on template, you're going to see gold. Once you click on gold, it'll make it exactly how I trade it every single morning. Again, just change your time zone so you're trading at the right times, and you're done. And you've got it enabled. So I know that that's been a question. We're trying to make it a little bit clearer on the site that even though you're downloading that strategy, it's the same for oil and gold. The default is oil. For you to move it to your gold chart, just change the template to gold. That's it. Very simple. Pete, thanks so much for the kind words, man. Yeah, it's I don't know. I'm a big person with karma. If you put out good vibes and generally try to help others, I feel like hopefully in the process I should get better at it as well. So thank you. I appreciate that. I appreciate those kind words. Any other questions with the level? Let's take a look at let me pull up the levels chart here while we're waiting for a trade in oil session 2. Ah, man. Here was the trade. Well, let's see what would happen. Again, I didn't think it was the greatest setup. I called it, I think, a B- in my book. Let's see if there's any fresh area. Oh, so the level is right here. So we already came up with a level of our take profit, which would be right there. That's what I can see. Let's see if this even gets respected or not. Above here, let's see if there's any other trading opportunity. What do I like to see? And another thing that I noticed with YouTubers on these gurus on YouTube is, and please don't ever call me that, is that you see them getting into trades after they've gotten into the trades, and then they don't really explain to you what exactly it is that they were looking at or why they were doing it. I would like to see them put the actual trade in so I can see exactly what they're thinking about for their take profit, exactly what they're thinking about for their stop loss. I don't understand why a lot of YouTubers just don't do that. It kind of bothers me. All right, so I got to go back into oil. I don't really see anything good here. On the 5-minute, I could come up with a level right here. You guys can take a look. Let me blow this up. So here's an only area that I can see where we had a clear uptrend, clear then downtrend, something right here made the market change direction. Didn't really get tapped into yet, but it's a little bit on the weaker side. So this personally would have been I think maybe a decent trading opportunity. We'll see here. Of course, I missed it, but that's the way the cookie crumbles. Got about 3.5 minutes left on this bar on in oil session 2, so we'll see if we can get a trade into there. Another thing with oil inventory report is that is an area of contention, I would say, with a lot of people as to if they trade it or they don't trade it that day. If you go back to my original video on the oil strategy, you will see that I was very hesitant at that point to trade the oil report. So I would just skip session 2 on those days. And then as I was trading this more and more and more, and obviously making videos on it, and then people on Discord just tracking everything, all of the stats, and I was seeing it, I would say it was having a positive, it would have a positive win rate on those report days. Now, if you go back to last Wednesday, I took a really nasty loser on there. The only part about the oil inventory report that I don't like is that, so we do not have an oil. The only thing that I don't like is that if it goes in the opposite direction, typically you not only are you going to take your stop loss, but it's also going to give you a ton of slippage. And let's just say that the trade was 18 ticks of stop. You might end up with 24, 26 ticks of loss, just because price action just goes through those levels so quickly. And that's the only part that I have not necessarily enjoyed trading it. Now, obviously, the flip side can be true. If it goes into your direction and it slams it, that's awesome. So that's one thing that you really got to look out for if you're trading oil session 2 during oil inventory. So I'll keep an eye out here on oil session 2. Let's take a look here. Oh, this looks like it might have been a good opportunity there. You're about four points in profit, but we'll see. Let's see what happens here. Let's take a look at the NQ. Right there. Okay, so we got to this level and didn't really respect it very well. This is where your stop loss would be at. So we'll see if we get a rejection here or not. But again, this was just too big of a gap. If you guys remember what I said earlier, just too big of a gap for me to find this to be a tradable short, at least in my opinion. Let's take a look at the YM. All right, YM tapped into this level that we marked out here. Well, about maybe a couple ticks away. And it did get a nice little rejection here. Again, not a tradable scenario for me just because this big gap right here doesn't lend itself to a good trade in my opinion, but looks like this might have worked out. Let's go back to the ES. Right here. Let's see what happens here. All right, we'll keep an eye on this one. Let's take a look at oil. Anybody have any questions? Now's a great time to ask away. And one of the main reasons why I also don't like, not that I don't like, that I don't trade the actual bot for the inside bars is that I really do enjoy the process of trading. I mean, I've stated in my videos before, I do like this. I do like the process of getting into trades, and it makes me feel like a trader. Like I get enjoyment from that. So that's why I do trade them manually. Now you guys I've documented my mistakes pretty well on the mistakes that I make. So I mean, it does cause probably a lot more issues than if I was trading this on the bot. But again, I like that manual side of trading as well. And then like here's another really good example of this inside bar idea. So you guys see you've got here, this would be your source bar. Here's a inside bar. Here's an inside bar. Here's almost an inside bar, literally by a tick. Inside bar, a little bit of a movement, inside bar, almost another inside bar, inside bar. What is this all leading up into? This is leading up into an area of very strong indecision, very strong pressure. If I was just trading this market and I had no rules or conditions, and I would probably be something looking like this. I would have an order to go long or short at the top of this bar and the top of this bar right here, and I would wait for one big boom one way or the other. Because you could just see it clear as day right here. I mean, some days we have 0 inside bars throughout the morning. And in a period of, I don't know, maybe 40 minutes, you've got 1, 2, 3, 4, 5, 6. That to me is just, it shows you the indecision in the marketplace. And then again, you're just waiting for that push, that momentum push to the upside. So I think that's a great example of one here. Well, there's kind of another example of one right here too. Inside bar, inside bar, inside bar, inside bar. This was the inside bar that we traded. Man, that was a great one. That was an absolutely great trade right here in gold. This is the one we took. And you could see it. I mean, it's just like, it's continuous inside bars. And what happens? You get that push out and you get that movement, in that direction. And their direction obviously went in our favor this morning. All right, let's see. Robert, have you ever considered setting 2 targets in the NQ using 3 or 4 contracts and letting 1 or 2 ride to a second target? Yeah, there's you could definitely make a case for that. Here's my feeling on that. I have tried on the NQ. So if you guys know, I've been trading the Rob reversal for probably 2 or 3 years, probably closer to 2 years. But I started off on the lower time frame. So I started off on the 1 minute time frame, and I also messed around with the 5 minute time frame. And at that time, I liked it because there was a bunch of trades that you can kind of get into. It was pretty clear rules, but I had a very, very sloppy results with it. It would have, good days, bad days, good days, bad days. There would never be like a consistent week or consistent month or consistent several months. And then at that point, I messed around with trailing and then leaving a runner. So I would leave a runner and then I would trail it at the end of each candle. And I never really had really good success with it. I always found that if I just left my initial targets, my initial quantities, which would be the bigger quantity, and let that just hit my take profit, that I typically had better results with it. And then for one reason or the other, I think that kind of like etched into my brain, and I've just never really messed around with it ever again. But I could definitely see a case for that on the NQ. I mean, it moves in such a beast-like manner that I could definitely see that I could definitely see that maybe being advantageous in the NQ. And if you're someone that likes to trade, you know, I don't want to say overtrade because that sounds negative, but I guess that's what it is. If you do like to overtrade, there you can obviously take this Rob reversal, okay, and move this down into a lower time frame. I got to be careful what I'm doing here because if I go in and I might activate a trade, but I have the strategy activated right now. So I just moved this down to the 5-minute time frame. Now, not really any setups that are showing up at the 5-minute, so that didn't really increase trades by much. Now, if I go down to the 1-minute, let's see what the 1-minute does. Well, the 1-minute you can start to see starts to give you, more trading opportunities. It's pretty simple. So it would have taken a trade right here. Granted, you got to remember that this is still looking for 70 points of profit and 35 points of stop loss. So you would have to adjust your trading based on the time frame that you're trading. I would not be going for 70 or 35 points on a 1-minute time frame. I would probably be going for closer to 15 points and probably a 1-to-1. A 1-to-1 risk to reward on that on a 1-minute. On a 5-minute, you could probably look for 20 or 25 points. This would get invalidated. This would get invalidated. This would get invalidated just because of the EMA. You might also need to adjust your EMA a little bit. Maybe move up to maybe the 9 EMA or the 10, the lower in the time frame that you go. But if you're looking for more trading opportunities, that's honestly the only thing you got to do is you got to change your time frame, make it lower, and then obviously adjust your take profit and stop loss. Your time frame rules have definitely helped me not overtrade. Yeah, that was a big one for me. That was an absolute big one for me, was setting those time conditions, the times, and really taking only one trade in, well, speaking of oil or gold, just taking that one trade during that particular time period. That was a big one for me. Because what I found with trading was, and that's why I'm kind of so scared about the levels trading, is that, oh man, this came really close. And that would have been a great trade. What would that have been? Maybe 6 points? Yeah, about 6 points. That would have been a nice little trade there. Probably would have taken my $300 profit on that one, just based on my bracket order default settings. But what scares me about the levels is that, yes, the only condition that I have that I think kind of gives me a little bit of a safety switch is that I like to take one trade per day. But this style of trading brings in a lot more emotion. Like, we took gold, I had no emotion in there. I knew what my stop loss was, what my take profit was. I knew exactly what I was looking for. There was just no doubt of what it was that I was trying to get out of that trade. This is a little bit more subjective. It's a little bit more discretionary. And that's the part that kind of scares me. So that is why I've kind of built in an internal safety switch, which says, hey, you get one setup that you like, one A+ setup that you can take every day. We're open to do that. If you lose, you lose. The next day you try to, you just try to win that day, win that trade. And that definitely has helped me out. So now you've got another fresh level right here on the 5-minute. intersecting both of these. You had a downtrend, and now you had an upward movement. So now this has started to get this range has started to get a little smaller. Now I would not take this trade again on the rejection of this level, just because it has already tapped into it. You can trade it on 2 taps. I find that, you know, obviously each tap afterwards, it just starts to get less and less effective. This trade up here I would not take. I would definitely would not take this one right here, because I got way too big of a range right here to make this anything worth it. The only other trade that I might consider would be something like this. This would be my stop loss right here. That's the only other trade that I can see myself taking on the ES here this morning. All right, so I got oil inventory report coming up in 9 minutes. And I'm going to refill my coffee. I'll be back in 1 minute. All right, we're back. All right, 7 minutes left for oil inventory report to be released. Obviously, we're going to get a pretty damn good movement on oil. It's actually kind of fun to watch. It's a little scary when you're in the trade, not to lie, but definitely fun to watch if you're on the sidelines or you don't get that set up yet. All right, let's take a look. Let's go through the charts. 15-minute, we had a setup to go short on the 15-minute Rob reversal. This is the pattern that we are looking for. And the pattern is actually pretty simple. I'll explain to you what it is and why I believe it's effective. Obviously, we didn't get activated here because this was looking for a short, and this closed above the ADMA, which is really my only piece of really my only filter outside of the time frames. But what we're looking for is you've got a clear up bar, okay? And then we are looking for price action to continue that upward trend and then get a rejection or a reversal. That's what we call it, the reversal. And for it to close, within this body to where it's not making a new low. So if this was to have closed all the way down here, it would invalidate it. We would be looking for a trade. Again, this is not a valid trade. I'm just giving you an example. Right here would be your entry to go short. Obviously this would not get activated because it closed above the ADMA. So, but that's where the reversal kind of comes into play. And if this bar right here would have made a new low and would have closed, not making a new higher high, then you would have here a great setup to go long, which would, looking at price action, would have been a nice trade if that setup would have come in. But it did not. All right, so we've got an inside bar currently in oil session 2. But again, we've got 3 minutes left on this inside bar timer. So we will see here what happens with price action. There you go. I mean, we were just talking about gold, where I was explaining to you, look at how many inside bars you had in this little range right here. I mean, I think I counted 7 of them. Look at the movement out. It's clear as day. It's clear as day to me that it maps out indecision in the marketplace pretty damn well. That was a nice little trading opportunity there. It was probably, I don't know, 20 ticks, 30 ticks. Excuse me. All right, we got 2 minutes left in oil session 2 here. We still do have an inside bar, equal highs. Remember, I do consider equal highs, equal lows as still an inside bar. I know there's some indicators that are out there that do not consider those to be inside bars, but I do for my strategy. All right, we got 45 seconds left here. Let's see what we get. This might be a rough one, because this one, if we do get the inside bar, is going to happen right as the news release hits. This is going to be a dicey one. Super dicey. This one might even cause an issue, but we'll see. Let's see. So we got activated really quickly into the long. Now I bring my stop loss right here. We're looking for 21 ticks right there. See what happens here. Got the overnight open right above it. I can reduce my risk down here down to, let's say, 105. And that came close to hitting our take profit. Let's see here. Well, it looks like I got it one tick off of my full take profit, so I'll move that to 21. Make the trade a little harder for myself, but that's probably where it would be at. Oh man, there's a ton of slippage here. Yeah, so right there, I mean, that's the slippage that you get with the report. Based on that, I probably would have already hit my full take profit. So this is not a good setup. Let me see where it would have been at. 17. Oh yeah, I would have hit it a long time ago. 78.24 is where it should be at. So it would be right there. Ah. Ugh. And I really bungled this one. All right, so I took a profit there. Not the best trading, just because, you know, and I said it right before I took this trade. I knew with that inside bar right at the exact same time as the oil inventory report coming out, that you were going to have a scenario where one, you took a ton of slippage on the entry, and it messed up all of my stop loss and take profit kind of parameters that I'm looking at. So I went into my trading view chart and I manually adjusted that. So I manually adjusted the take profit where it would have been without the slippage. But again, I was taking more risk than I was for my take profit. So I was able to reduce my stop loss based on that movement. Obviously, it caught that one pretty well. But let's see here. Let me post these really quickly. Let's post the gold trade. So we're up $310 on the eval. Not up anything on my cash account because I wasn't able to trade any of these trades today. But that's the way things happen. All right, so we're done with our morning strategies. That's it. We took 2 trades today. Both trades ended up being a winner. Oil session 2 was a tricky one, obviously, with oil inventory. But up $310 on the eval there. Let's quickly take a look at... So we would not have, if we would have kept our take profit here at 7.25 points, we did not. We would have gotten stopped out here on the levels. Again, not an A+ setup for me, but you would have at least gotten, I think this came to about 5 3/4 points of profit. So that would have been really close to my default of 6 points or $300. I guess at this point, the only other trade opportunity that I would see is up here. Yeah, this is probably the only other setup that I would maybe consider taking here this morning. So we'll see where price action ends up at. I don't believe nothing else came up on the Rob reversal. Nope, we do have a setup as of right now. You've got almost 10 minutes left on this candle, but you do have a setup that's appearing. Again, this would have to close below the 8 EMA to get into a short based on how far we are. I don't see it likely, but it could possibly happen. So with that, I am I'm going to be signing off. Remember that my video for my levels should already be on YouTube. So if you go onto my channel, you'll see that video explaining how I come up with these levels that I mapped out for you guys here this morning. And I'll see you guys soon. Happy trading, everyone.